Your monthly mortgage payment could decrease by $300 if you act now. Here's how the math works. Freddie Mac's latest data shows 30-year fixed rates at 5.8%, down from 6.4% just last quarter. That means on a $300,000 loan, you're looking at $300 less per month in principal and interest alone. But here's the catch: rates could rise again in Q2, and timing could make or break your savings. Let's break down why now is the window. On the Money Decoded, we break down home buying so it actually makes sense. And today's topic could save you hundreds every month. Let's start with the basics. Mortgage rates are like the weather for home buyers. When they drop, it's a rare window of opportunity, and right now we're in one. Freddie Mac's Q1 2026 survey shows 30-year fixed rates at 5.8%, down from 6.4% in Q4 2025. That might not sound like much, but for a $300,000 loan, it translates to $300 per month in savings. To put this in perspective, imagine locking in a 5.8% rate today versus waiting until Q2. If rates rise by even 0.5% to 6.3%, your monthly payment jumps by $100. That's not hypothetical. The Reddit/real estate thread shows users debating whether to lock in now or wait, with many fearing a repeat of 2022's 7% plus rates. But here's where most people get tripped up. They focus only on the rate, not the timing. Lenders offer 30-day and 60-day rate locks. A 30-day lock gives you more flexibility but carries the risk of rates rising before you close. A 60-day lock is safer but might cost extra. The key? Know your closing timeline and ask lenders about their lock policies. The math also depends on your loan size. For a $500,000 loan, that same 0.6% difference would save $500 per month, enough to cover a second car payment or a child's tuition. But the risks aren't just financial. If you wait and rates spike, you could end up with a mortgage that eats into your budget, forcing you to sell later at a loss. This isn't just about numbers. It's about positioning yourself to win in a market where timing is everything. And the next piece of the puzzle? Understanding how to actually negotiate with lenders. Let's get into the nitty-gritty. A 5.8% rate on a $300,000 loan means your monthly payment would be around $1,700. If you wait and rates climb to 6.4%, that same loan would cost $1,800 per month, a $100 difference. Multiply that by 12 months, and you're looking at $1,200 in extra interest annually. Over 30 years, that's $36,000 in savings. But here's the catch: mortgage rates aren't just about the principal and interest. They're also tied to closing costs, which can be 2 to 5% of the loan amount. If you lock in a rate now, you might pay more upfront, but lower monthly payments could offset that over time. For example, a 3% closing cost on a $300 loan is $9,000. But if you save $300 per month, you'll recoup that in just 30 months. The Reddit thread highlights another angle. Some lenders are offering incentives for early closings. One user shared how they negotiated a 0.25% rate discount by agreeing to close within 30 days. That might not sound like much, but on a $300 loan, it saves $150 per month. A small win that adds up. However, the risks of waiting are real. The Fed's economic projections show inflation still hovering near 3%, which keeps the Federal Reserve's interest rates elevated. If the economy strengthens, the Fed might raise rates again, pushing mortgage rates above 6.5%. That's not just a hypothetical scenario. In 2023, rates jumped from 5.2% to 6.5% in just 6 months. So what's the best approach? It depends on your financial situation. If you have a stable income and can afford a down payment, locking in now makes sense. But if you're waiting for a better offer or need more time to save, a 60-day lock could give you breathing room, as long as you're prepared to pay the extra fee. The bottom line? The 5.8% rate is a rare opportunity, but it's not a guarantee. You need to understand the numbers, the risks, and how to leverage your position with lenders. So what can you actually do with this information? First, get pre-approved. Lenders will give you a clearer picture of what rates you qualify for, and it shows sellers you're a serious buyer. But don't just take the first offer. Shop around. The average difference between top lenders is 0.3%, which on a $300 loan saves $150 per month. Next, ask about rate locks. If you're planning to close within 30 days, a 30-day lock is fine. But if you're unsure, a 60-day lock gives you more flexibility. Just be aware it might cost extra. One tip: Some lenders offer float-down options, where you can lock in a rate now and get a lower one if rates drop further. You should also negotiate. The Reddit thread shows that 20% of users got a rate discount by asking. Here's how: mention competing offers, ask about lender incentives, and be clear about your timeline. If you're a first-time buyer, some lenders offer programs that reduce closing costs or provide down payment assistance. But here's the most important thing to avoid: waiting too long. The longer you wait, the higher the risk of rates rising. Even a 0.5% increase could cost you $100 per month. And that's just the beginning. If you're in a competitive market, waiting could also mean missing out on homes that sell quickly. Another pitfall? Overlooking hidden costs. A 5.8% rate is great, but don't forget property taxes, insurance, and maintenance. On average, these add 1 to 2% of the home's value annually. For a $300 home, that's $6,000 per year, or $500 per month. So while a lower mortgage rate is a win, it's not the whole picture. Finally, don't forget to compare total costs over time. A 5.8% rate might save you $300 per month, but if you can get a 15-year loan instead of a 30-year one, you'll save even more in interest. However, 15-year loans require higher monthly payments, so it's a trade-off that depends on your budget. The key takeaway? The 5.8% rate is a window of opportunity, but it's not a magic bullet. You need to understand the numbers, negotiate smartly, and act before rates rise again. And if you're still unsure, the next video will walk you through exactly how to talk to lenders, so stay tuned. If you're thinking about buying a home, hit subscribe. We break down mortgage strategies every day. Locking in a 5.8% rate now could save you $300 a month. Tomorrow, we'll look at how to negotiate with lenders for better terms.